custodians of the land in which we meet. Pay my respects to their elders, past and present, as well as emerging leaders. I extend that respect to Aboriginal and Torres Strait Islander people here today. Well, welcome everyone. We've had a very big turnout to this event. You'll see there's a few empty seats. We've had some significant rain in Tamworth overnight, so that's impacted our numbers a little bit. There's also about 50 to 60 people online, a bit more than we would have expected now due to that weather. My name is David McLennan. I'm the Managing Principal at Forsyths, a role that I've been in for the last month. It's a role that takes me across a number of our locations. So we've got 5 locations. I get to spend some time with our team members, but also get the opportunity to meet some of our valued clients. So welcome everyone today. This is the third event that we've now held over the last couple of years, and obviously given the number of people in the room and online, it's a very hot topic and one that we're quite keen to hear from our expert panel today. So what we hear when we go around to each of the offices, when we're speaking to our clients, is about different topics that you want to hear about, and we see our role in bringing together experts in their fields, be it lawyers, bank managers, and other specialists. So fantastic opportunity to bring these guys along. Now, I'll be first to admit that carbon farming is something that I'm not an expert in, and thankfully we have these guys to ask the questions or hear directly from today. So for me, carbon farming, is it a fad, or is it something that's going to go away, or is it something that is going to be around here for the long term? So I'd like to get started, and I'll start by introducing the panel. So do bear with me because I don't want to get any of their bios wrong. So I will just read these. So I'd like to introduce Hamish Webb. He's the Director and CEO of Precision Partners based out of Armidale. Precision Partners is an independent soil, pasture and carbon services company. They use the latest technology, satellite imagery and GPS soil testing equipment to assist farmers across Australia to achieve their production objectives. Hamish owns a 3,200 acre sheep and cattle property near Uralla, which has its own soil carbon project. I'm looking forward to hearing the realities of carbon farming from Hamish. Thank you for joining us today.
Thank you for having me.
We're also fortunate to welcome Daniel Mariato from Cal Clark Commercial Lawyers based out of Adelaide. Daniel is a Senior Associate in Cal Clark's Tax and Revenue and Agribusiness Practice Groups. He specialises in federal taxation law, state revenue law and superannuation as it impacts business and high net wealth private groups. Daniel assists clients in achieving sound taxation outcomes in discrete advisory matters, transactional matters, and in dealing with revenue authorities in rulings and disputes. Daniel is also a co-author of the Australian Agribusiness Advisors Guide, regarded as the definitive text for accountants and other professional advisors, acting for clients in the agribusiness sector. Forsyths have developed a wonderful relationship with the team at Cal Clark, and we've been working with a number of our local clients. Thank you, Daniel, and his colleague Carly for making their way to Tamworth from Adelaide to share their knowledge with us today. Thanks, sir. Next, we have Josie Zill. Josie is NAB's Agribusiness Executive. Josie oversees NAB's agribusiness portfolio, looking at markets, weather, climate, and other trends influencing the agricultural sector today and into the future. Josie is also a beef and fodder producer in Gippsland, combining practical agricultural knowledge with a keen awareness of profitability, market, and environmental dynamics. Currently based out of Victoria, Josie actually lived in Tamworth back in 2008, so she knows the area well and was excited to land back in the country music capital last time. Thank you, Josie, for coming up to share your knowledge with us today. I know you have some local NAB team members in the audience. If anyone is keen to have a chat with them after the panel. And last but certainly not least, our very own Jacob Sawyer, audit principal here at Forsyths. Jake has developed a diverse range of expertise over his 14 years of audit experience. The list is long, but the most relevant today is his specialisation in carbon neutral consulting and review and in clean energy assurance. Jacob is leading up our Forsyths team and developing our Forsyths service to complement this emerging space. Jake's driven down the hill from Adelaide. I'm keen to get started and learn more, so let's get going. Now, we will open up for some questions at the end of the panel. So if you can leave any of those questions there, it'd be fantastic. So I'll start with Jake. just to make sure we're on the same page, mate, what exactly is carbon farming?
Yeah, thanks, Dave. So yeah, I'll take on the monumental task of trying to define carbon farming. As an auditor, I do like to talk, so I'll try and keep it brief, acknowledging that there is, probably various levels of understanding in the room about carbon farming. So I guess the first thing is, what are we talking about when we're talking about carbon? So, we're talking about various different types of gases, not getting into the science, but various different types of gases that, end up through emissions in the atmosphere. And that essentially creates, like an insulation that, results in various different outcomes depending on where you sit on this. The worst case scenario is like that movie Day After Tomorrow. But, that's sort of not really relevant for this, but we're talking about the gases that are emitted, through various things like, driving a car, running a tractor, mining, all sorts of different things. We are a carbon-driven global economy, and where carbon farming comes into this is various different types of agricultural practices that are designed to reduce the amount of carbon that is in the atmosphere. So in terms of those types of practices, the best way to categorize them is first into emissions avoidance. So that's essentially either you stop doing things that emit carbon into the atmosphere, or you do it more efficiently. So that'd be things like, from an agricultural perspective, putting a solar farm, on your land that is taking away reliance from fossil fuels. Another way to do it is converting different types of gases that have a very high global warming potential into gases that have a lower global warming potential. And the best example that I have from my own experience with this is the piggery industry. They do this quite well. So they, as you know, pig manure has a lot of methane in it. Methane is deemed to have a very high global warming potential. So through a process where they put the manure into a biodigester, they extract the gas and they actually flare that gas off and turn it into carbon dioxide. So carbon dioxide is deemed to have a lower global warming potential. Don't ask me about why that's the case, but it does. That's how they're reducing the impact on the atmosphere. And then the third type of carbon farming, which is most relevant to the discussions today, is sequestration. So that's where you end up, through practices, you store carbon in soil or vegetation. So, through various different types of practices with soil management, and I won't get into this too much because Hamish has first-hand experience with this and he'll talk about this in more detail than me, but you increase the carbon content into your soil. That might be through herd and crop rotation, through applying fertilizers to the soil, all that sort of stuff. Or, you do things like you lock up a component of a farm and you revegetate it. So, you might have, through various types of, herd, farm management, you've got a bit of land that, is very desolate. You go through and you revegetate that, you turn it into a forest or something like that to take some carbon out of the atmosphere. So that's sort of the key elements of carbon farming. And we'll elaborate that a bit more through the rest of the discussion. Thanks, Dave.
Thanks, Jake. Hamish, to you, mate, before we get into your work and Precision Partners, you've actually been running your own carbon farming project on your property. Can you tell us why you decided to do this and how you got started?
Sure, David. If there's anyone here that is waiting for me to say we got into it for a greater reason for global warming or to answer the methane question for our cattle, you're going to be extremely disappointed. It was nothing like that at all. I was not looking to get into carbon farming for any great reason. I was simply looking to improve our pasture for our existing livestock business. We're not from the New England. We moved here several years ago. My wife's from South Australia. I'm from Western Queensland. So we sought some help to optimise our soil health for our pasture production. And that's when we got the founder of Precision Pastures, a fellow called Milton Kirkpatrick, came out and he did some soil tests and he said, you've got some problems here, Hamish. You've got some pH issues. You've got a massive sulphur deficiency. You've got some potassium deficiencies, phosphorus. I could go on, but it was pretty horrific reading for us who just made a pun, to come down here and buy some country. But he said, don't panic. Let's talk about lime. Let's talk about single super. Let's talk about a pasture improvement program. You know, if you'd rather, we can look at composts or etc. And then as he was leaving, he said something that just changed everything. He said, oh, by the way, those activities, the lime, the single super, pasture improvements, they are what's called an eligible activity to undertake a soil carbon sequestration project with the Clean Energy Regulator. Now, I had no idea what he was talking about, literally couldn't spell sequestration. But he was right. I looked into it. I did a little trial on about 150 hectares. I did the lime, I did the single super, I did the pasture improvement program. I increased my carrying capacity of DSE per hectare per 100 mil of rain by a bit over 70%, which you would expect for doing the pasture improvement. But I also increased my soil carbon from 0 to 50 centimetres by about 1/4%. Now, I had no idea what that meant, but it wasn't too hard to work out that had I been registered and had I been issued ACCUs in gross terms, that was worth about $1,200-$1,400 a hectare to me in carbon credits. So a few light bulbs started going off. The main one was, this is in alignment with my production objectives. I'm not going to reduce production at all. It's the exact opposite. That's the reason I got into it.
Right. So from there, you then got more involved with precision pastures. So you've now become a consultant. So how it's worked from there?
That's right. So after the trial, you know, Milton is a lovely fella, but he's nearing retirement, and he said, you know, would you give us a hand with this business? And so my wife and I invested in it with a couple of friends, fools and families, as the saying goes. And yeah, we've grown it. We've got Inverell, Armidale, Dubbo and Albury, and we do a lot of soil testing. And one of the first new services we wanted to come up with is a carbon starter report, a preliminary, fast, quick, cheap, basically soil test trial for any farm in the country to see if it can work for them, because it's not going to work for everyone. But what we want to do is help producers look at it and see if it can work in the same way as it does for me, in alignment with your existing production objectives. And we do that from Rockhampton down to Gippsland and across to South Australia now.
Okay, so what's involved in those reports?
So there's two parts to it. The first part, part A, is predominantly uses satellite imagery to look at, we start with your farm lots, we look at the cadastral boundary map of your farm, we look at any areas that might need to be excluded by the clean energy regulators, so areas of high tree canopy cover, exposed rock, high density livestock areas, fruit yards, holding yards, roads, rivers, sheds, etc. So remove all the exclusion zones. What are we left with? Is that efficient? Is that large enough? And then what are some of the satellite imagery or radiometric imagery? What's that telling us that gives us a clue to soil type? Things like bulk density, gamma radiation, NDVI, they're not the gospel, but they give us clues to what your soil type might be like. And if your rainfall's good enough, your area's good enough, and your soil type might be suggesting you can do something to improve it, your part A is a go. And then we come out and we do some soil tests, and at least 6 soil tests, 0 to 30 and 30 to 60. And we're actually looking for problems. We're looking for the pH issue. We're looking for a nutrient deficiency. We're looking for a toxicity that, if resolved, is likely to increase plant growth, root growth, therefore carbon, therefore production. And then we wrap that up in a cost benefit analysis.
Fantastic. Daniel, over to you, mate. Why are lawyers involved in carbon farming, and what are you seeing happening right now from a legal perspective?
Yeah, it's really interesting hearing from Hamish and some of the sort of the commercial viability questions. That's not us. So from a legal perspective, and I'll speak firstly just to my experience as a tax lawyer, largely is working with you as a client in terms of how do we structure the project from an entity perspective. So how are your existing landholding structures looking? Are they held in companies, trusts, individual names? What are you using as a trading entity? How does the carbon project interface with your succession planning, the tax treatment, which will depend on how you structure the project legally, your ability to claim deductions against possible ACCU income that you might be generating in the future, and how do we get the structure to sort of optimize those outcomes. Well, I'd also work closely with others in my firm, for instance, in the property team, who are dealing with some of the legal risk and compliance issues associated with undertaking a project. So there's questions like, how do you define the project area? If you're negotiating with a carbon service provider, how are the payment terms split? Who's going to be the project proponent? What that means is who has got the legal right and responsibility in relation to the project, and who's accountable to the regulator, but at the same time, the person that's issued with the carbon credits associated with the project. So questions of control, risk mitigation, and basically trying to give an assessment of what are the risks involved, and you can make a commercial decision from there as which am I willing to take on, or which are we trying to contract out of, what sort of warranties and indemnities do we need from a developer coming onto the land to assist us with this project. So that's sort of the legal side of things. In terms of what we're seeing, it's interesting because we have a fairly significant agribusiness practice who are acting for conventional farmers and landowners, and a lot of those we're seeing are being approached by the carbon developers to undertake projects on their land. So they're not necessarily people that were of their own volition thinking about a carbon project, but are now saying, okay, this opportunity has come up. And it's seems to be a general sentiment, I think, in the market that there's going to be possibly increasing demand for carbon credits, particularly amongst the bigger polluters that have obligations under what's called the safeguard mechanism. So they've got obligations to push down their emissions. And at the moment, it's looking like they're going to have to use a high degree of offsets to do that. So there's opportunities there for clients. And I think we're also seeing, as the market's maturing a little bit, more of the landowners being the project proponents, being the ones that are actually taking the credits from the project rather than a share of the proceeds that a carbon developer might derive from taking the ACCUs, selling them and taking it across. And that means there's increasing responsibilities on the landowners, but also possibly increasing rewards and return with that. Probably just one other point I'd make from a tax perspective is we've seen some legislative developments in the tax space around how income from carbon projects is treated, and in particularly in June last year, some changes came through that allow, provided your structuring's right, the income from a carbon project to possibly qualify as primary production income. And what that means is it can still allow you to access things like primary production averaging or farm management deposits, which you might use as part of your tax planning, when traditionally carbon projects aren't really seen as falling within what's primary production in the usual context.
Thanks, Dan. So, Josie, what's the bank's involvement in carbon farming, and how seriously are the banks taking the emerging industry?
So I think from an overall climate point of view, which we had a really great introduction to before, the banks have commitments, it's not just us, it's our peers as well, around supporting sectors that we bank to reduce their emissions footprint. So whether it's the oil and gas sector or whether it's commercial real estate, and agriculture is one of those as well. And so when NAB looks at our portfolio, and we're the biggest agribusiness lender, we lend about $1 in $3 to the ag sector. Agriculture is really important to us. We've got serious skin in the game here. And when we assess the impact that agriculture can have on nature and natural capital and the environment, but also the dependency that agriculture has on a healthy environment as well, it's high on both of those measures. So that's why we're really motivated to make sure that we support our agribusiness customers to be farming with practices that will support climate resilience, and also look to take advantage of, where some people want to, of some of these emerging opportunities to monetize carbon as well. And so just specifically on, it's a long answer, right? I'll keep it short because these guys are super interesting, but I'm learning a lot today. I think it's fair to say that our customers, and we're all on a journey, we've invested in research with Farming for the Future, which supports the notion, and there's evidence there that says that supporting natural capital within a farming business has a strong tie to historic financial performance. So there's some data there to say that this is important. And so we've got customers that are coming to us saying, what's NAB doing? The way banks can support is by investing in research. but also providing green lending to support people who want to spend money on these projects that are going to have a resilience effect for their business against climate risk, but also reduce emissions. And one of those are soil carbon projects and above ground tree projects as well. So yeah.
Great. So Jake, what's your role in carbon farming project? And what are you seeing out there in the community at the moment?
Yeah, thanks for that, Dave. So I guess my role is as the auditor. So I guess for a bit of background, there's a lot of public monies being invested in carbon farming and clean energy projects in general. So there's a very high expectation from the community, from the government, from regulators that what is being done is actually what has been agreed to be done. The money is being used appropriately, transparently, and the outcomes around carbon reduction are actually being achieved. So as an auditor, where we come in, we're there to provide confidence to those stakeholders that what is actually occurring passes the pub test. And a little bit more as well, but passes the pub test. So essentially, all projects under the Clean Energy Regulator, they have an audit requirement where you have set timeframes where you need an audit, and then we come in, we look at everything that Hamish has done, everything that the proponent has done, and we form an opinion and we go to the regulator, yay or nay, and that's basically where we come into that. In terms of what's happening in the industry, so we going on from Daniel's point around the safeguard mechanism, we've got some experience there doing audits for that safeguard mechanism of these big emitters. And yeah, I think there's going to be a massive increase in demand for ACCUs. It's just my personal opinion, because there's the reduction scale that these emitters have to do over the next 10 years. They have 10 years to reduce their emissions to what the government deems to be satisfactory, and there's going to be huge pressure on them to do that. We've worked with mining companies where they're really looking at their scope 1 emissions are fuel and diesel. How are they going to continue to power the dump trucks, the big earth movers with anything other than diesel over the next 10 years? There's a lot of pressure there. They're going to put a lot of investment in it, but I think there's going to be a shortfall there where they're looking to purchase these ACCUs, looking to invest in carbon farming projects and other projects out there in order to be able to reach their targets. So, I think it's an industry that I've seen over the last decade get bigger and bigger, and I think it's going to continue on that trajectory and potentially get exponentially bigger as the government moves towards that net zero goal of 2050.
Fantastic. So the next question is for all of you guys. If I'm a client looking to start to get into this industry, what information would you be asking of me, or what would I need to consider before coming in to meet with each of your respective roles? So Hamish, I'll start with you, mate.
Well, the first thing perhaps I wanted to know was my farm viable? Could it work? Some of the most common methods, the human-induced revegetation, they're 20,000 hectares out of Burke or Cunmulla. That's not what I have. So I wanted to see simply, cheaply and quickly if my farm was eligible. That was the first thing. And then secondly, I wanted to ensure that if I got hit by a bus, that my wife or whomever over the farm, that they weren't saddled with some massive obligation for the next 25 or 100 years, that they had flexibility to pull certain levers to do what they needed to do. And you or your trusted advisors of the financial and legal community can help with that as well as I can. But that's what I look for, the certainty that I could actually do it and then minimise my risk and obligation.
Perfect. Well, that's a good segue to you.
Yeah, well,
mate.
Yeah, I think as a client thinking about a potential project, I think there's a few things we'd be interested in up front. Like, what are your objectives? What are you hoping to achieve by this? Are you looking to be looking for an additional source of income stream that doesn't affect your predominant farming operations, or are you looking to take on a bit more and become more focused on the carbon side of things? How is that likely to impact on your existing operations, and is there possible incompatibility between the project and your existing land use or possible future contemplated land use? For instance, we've seen clients who might also have land that's viable for a renewable energy project like wind farming or something like that, and those uses are really incompatible with a carbon farming use. So what do you want to achieve? I think also whether there's a question of using the carbon credits for insetting too. I think, you know, Jacob's mentioned and Hamish has mentioned too, and Josie too. In fact, everyone really saying that there's pressures coming down the supply chain in terms of needing to show your customers that you've got an ESG strategy or that you are moving towards carbon neutrality. So if, for instance, you're wanting to take credits to use against your own emissions, we want to make sure the contract's drafted around that. So you've got, if the service provider, for instance, is taking the credits, you want to have a right not only to income, but also to be transferred credits in lieu of an income payment so you can offset them. These sorts of things would be thinking about. And I think also back to the structuring from my perspective would be where do we want the income generated? From an asset protection perspective, for instance, you probably don't want to have a lot of risk put on the entity that owns the land, because that's where a lot of the value is. So can we involve the trading entity in the structure as having a lot of the contractual obligations and therefore the risk associated with the project rather than your land owning entity? So I think having a good idea of your structure and what we want to achieve is probably a good start.
Right, started. Is it too late to change structures?
Not necessarily. I think there's always things that can be done. So I think, yeah, even if you're already some way through the process, it's always worth taking that advice. Yeah, I think also just with negotiations with service providers too. Sometimes we've seen clients having to negotiate, for instance, if it's early in the project, having professional and advisory fees or consultants fees, for instance, to verify project viability covered by the service provider. So there's things like that. If you get in early enough, you can negotiate those terms as well.
Yes.
So from a bank's point of view, we're going to be interested in the information that's been provided from these two. So we're interested in the project design that's been put together, what our customers' motivations around the particular project are. So whether it's complementary to their existing business or whether their business will materially change with what they propose to do. So are they going from a grazing business to, human-induced regeneration? So from a bank's point of view, because that servicing would change, materially, we need to make sure that, we understand what the servicing is on that facility. We're also interested in, because we ultimately would provide consent as having a mortgage over the property, if we do have a mortgage. So we also need to understand, are there going to be any material impacts to the value of that property? So we'd be keen to understand, if it's just going to be maintained as a grazing property, for example, but some, changes in practices to achieve an increase in soil carbon, we're really, on board with those. If there's a big change, as I mentioned, what happens to that asset? What do we expect? So we're very supportive when we're asked to provide consent. In the most part, we're really keen to partner with our customers to support that. But we do want to know, what the future goals of the business are. And so some considerations that we'll have is understanding, how long the business will be held for in its current form. And people thinking about selling it in a few years' time, there's been some really robust questions around that. What happens when it's sold? What's the market for someone to take on that project? And we will always ask our customers to seek legal advice as well, because, we're not here to provide that legal advice. We're a sense check, but, we will, draw on, on the pool of experts out there and ask our customers to do that.
If I'm looking to finance that project, what is the bank looking for there? Do I get a better interest rate?
Yeah, that's a good question. So there's some projects which people change their practices. They don't cost anything or much. That people we see they might be introducing cell grazing. They need to put put in some fences or some troughs. So some people will do that incrementally out of cash flow. You won't, some people won't go and get a little loan to do some things like that. So some of it's practice change. We do have customers that are doing something big and structural. So we've had a customer who's, planted Lakina, for example. So we've done a green loan for that. We do green lending for projects where there's a business plan and a need to fund to something specific. And so in those situations, our green lending, we've got a pretty strict criteria. It's got to meet either emissions reduction or climate resilience framework. But if you're doing a soil carbon project or a carbon project, it's likely that you've got a RIPA business case already and that you're going to have it registered with the ERF. So a lot of that work is already done for you. Yeah. And there is a modest reduction on the interest rate. Talk to your bank about it.
Okay, well, I mean, great opportunity to talk about a green loan. So what is a green loan? If I don't meet those low emissions, what will be the impact on them?
Yeah, good question. Well, so I'll talk from the bank and you can be the customer. Yeah. I haven't worked with Hamish, so there's no connection here or conflict. But our green lending it's pretty strict. So you would have all heard of greenwashing. We need to be really careful that when we're funding activities under a green loan, that they are aligned to our green bond standard. So quite often we'll have people come to us saying, I'm regenerative, can I have a green loan? We'll be asking questions such as, do you have a carbon baseline? Do you have a plan to reduce? Or are you doing best practice zero till? Are you, depends on what industry you're in and what your farming business is as to what the criteria are. But it's pretty strict. And sometimes we've got people that are doing incredible things, but they're still, doing tillage and they're maybe not doing precision application of fertilizer. So it is pretty strict, the criteria. You need to talk to your bank depending on the industry that you're in. And then the review process is that we will catch up with you each year to check in on progress, to make sure that if you've committed to us that you're going to reduce your emissions, that you are, you've done a baseline. We do understand that seasons change and, things can happen within a business. We don't take a short-term view of these, but if best intentions, you're doing everything that you said, we hope that we're going to be travelling with that business through an emissions reduction trajectory. Or if you're, a whole farm best practice, we know that we're relationship managers, we're out on farm, we're going to be talking about your farming practices. So it's the annual review process where we check in and say, yep, you're still aligned to our standards. Play on.
Perfect. As a client, Hamish?
Just two quick disclaimers. Precision doesn't give any financial advice. We never will. That's what these experts are for. And yes, we don't have anything specific. I'm not a NAB client. Perhaps I should be. Part of a pilot program for a green loan, and it was a very, very well priced loan, very, very attractive rate. And basically that amount of capital I have to acquit for various steps of my carbon project. So registration cost, baselining cost, the eligible activities that I talked about. It's very simple, it's very straightforward, and it's a fantastic rate.
Great. Now, Jake, I've got you, mate. So just circling back to you.
Yep.
So what information would you be asking for and what would I need to consider if I'm catching up with an auditor?
Yeah. How much time do you have, mate? I guess when it comes to audit, we're coming in when you've got your offset report after about 5 years or however long it is you've got structured with the regulator, and we're basically trying to make sure that what you're reporting as your carbon offset or sequestration is kosher. So we'll be asking you questions about the project, and I guess the critical thing is we have a very short period of time to try and get a good understanding of your project. You might have been working on this for 5 years with your consultant. We have, a week, 2 weeks to try and get a similar level of understanding to be confident in what you're reporting. So I guess it's very important, two things. We generally, unfortunately, we can't take you at your word. So if there's an assumption that you're making or something that you're reporting, we need to see the evidence behind that. And a good example of that would be, say, with you've said you've increased the soil in the carbon in the soil by 30%. We'll be going, all right, well, what activities have you done? It may be that you've been applying lime to the soil. Well, we'll go, well, show me the invoices where you purchased the lime. Show me where you've actually, the logbook of when you've been applying that lime to the soil or evidence that you've been doing it. Show me the soil testing results. Show me who's done it. Are they an expert? What assumptions have they made? Have they complied with the methodology? So, we quite quickly, we want to dive in and make sure that everything's okay. I think it's very important. A lot of people get apprehensive about audits. We're not actually there to come in and go, gotcha. That's not what our role is. We actually, we're very invested in a good outcome for you just as much as you are. So, if I come in and I'm auditing a project and something goes wrong, that's just as much of a headache for me as it is for you. So, I really want to, emphasize that auditors are there to be pragmatic. We want to work with you. We want to get a good result. In terms of just moving on to another thing, there's a misconception there that because of where we actually do our audit work, that you should only talk to us at the end. You should only talk to us after 5 years after you're getting ready to do your offset report, or you've already done it and you go, oh no, I need to find an auditor. I think that we've been finding, that when we identify issues years down the track, it's really hard for you to go back and retrofit it and to actually become compliant if there is something that you haven't been doing right per the methodology. We've been seeing a lot of success where proponents and consultants have actually engaged us early, and we can come out, after the project's been registered, after you've started your activity, you've done your baseline soil testing, and we come out and go, we sort of do a mini audit and we go, here are the issues that you might encounter when it comes time to do your audit in 5 years' time. Here are some recommendations how to address that now. So, there'll be no headaches essentially when you get to that audit period. So, those are sort of questions we'll be asking and when you should be talking to us.
Okay. So, Daniel, what are some of the common issues or questions that you have to work through with clients in relation to a carbon?
Yeah, so I'll speak to my experience as a tax practitioner rather than the general legal issues, of which there are many. One is just the taxation treatment of these things. So it's quite a unique regime for taxation in that the law prescribes a specific series of measures for taxing carbon credits. So there's possibility, depending on how you're structured, that you end up being taxed on the issuance of credits before you've actually sold them. So there's what's called like a rolling balance mechanism. So you look at what are the credits I've got at the start of the year? What are the credits I've got at the end of the year? Has the value changed based on the cost of your holding? So let's say you had 0 at the start and you were issued with 10,000 ACCUs at the market price, the spot price of $30 an ACCU. At the end of the year, you're going to be holding $300,000 of ACCUs, and so that ends up becoming assessable income. So there's a question there around, well, how do we, funding that tax? Is there a way to defer that tax? How's it interface with your deductions? So with your tax deductions, as you may or may not be aware, there's a question of whether the money you're spending is on revenue account or on capital account. If you're spending money on capital expenditure, you can't normally deduct it straight up. So there's a question of to what extent can the expenditure be characterised as being recurring, regular, and therefore deductible. If it's capital, there's a question of, well, does it fit in with things like primary production write-offs? So you might be aware that if you spend money on fencing assets as part of a primary production business, you can get an immediate tax write-off. So if we're doing fencing work as part of a carbon project, can we fit that in to our primary production activities and therefore deduct it? Is it business capital expenditure where you can deduct it over 5 years? So trying to structure those sorts of issues correctly is one issue. The other thing is this, I mentioned earlier, this treatment of income from carbon farming as primary production income. And there's some issues around that in terms of eligibility. So there's questions of how connected is the carbon project with the primary production land? So the legislation requires that the carbon project's on land that's basically connected with or closely related to the primary production land. So there becomes questions of interpretation around that in terms of how we actually apply those provisions. So I think there's a few sort of tax issues to work through. If ACCUs are held by an individual, you can sort of get out of this rolling balance mechanism where you end up being taxed when you actually sell them. But that won't apply where you've got entities involved, and that interfaces with your asset protection, possibly your succession planning. So those are probably some pretty common issues that are coming up.
Right. Now, we've spoken a bit about carbon credits and that use, and Hamish, you've been in the game for long enough. I imagine you hold a few. Are you happy to tell us about how you've treated them and what you've done with them?
Sure. Well, actually, I don't hold any yet. I've done my baselining, but my next round of sampling for soil carbon can be 5 or even 6 years after the baseline. But I certainly have looked at what I'm going to do, and there's a lot of commentary about what people should do. Now, at the end of the day, I think it's up to every producer and their own particular objectives. There are basically 4 possibilities. Again, talking from my own personal perspective here. One is you can apply for a contract to sell your credits to the Emission Reduction Fund, the government. And those contracts can be fixed or variable, pricing, delivery date. But that for me, to sell forward something I don't already have yet, gives me significant production risk. So I'm not interested in a forward contract with my credits. The second is to sell them on the spot market. Jacob talked about the safeguard mechanism, as did Daniel, and there's a lot of companies out there. Well, there's over 200 that are part of this safeguard mechanism. They want credits desperately. So, and they're buying privately. When your project's registered on the Clean Energy Regulators website, they will find you, they will call you, and they will ask you if you want to sell your credits. That's already happening to our clients. So I might do that. My credits. I'm also looking forward to the Australian Carbon Exchange, which the Clean Energy Regulator still says they're on track to deliver later this year. That's effectively an ASX equivalent, a trading platform for carbon credits. I'm very much looking forward to that. So if I've got credits in my own balance sheet, on a Friday I can sell a couple of decks of steers and sell some accus if the price is good. That's my second option. Third option, and one that gets talked about a lot, so much commentary on this insetting concept, and plenty of the post-farm gate customers are talking a lot about we're all part of this supply chain, we've all got to work together to reduce our emissions. But in the very next sentence, they're saying, oh, but don't think about getting any premium because the cost of living crisis, etc. We're all basically share your carbon credits with me, and we'll look after you with market access and all of this nonsense. It's absolute. It'd be like me loading 2 decks of steers and sending a couple of tonne of grain with it as well for free. Oh, my carbon is costing me money. I'm going to get at least some of that money back somehow. So I'm not going to be giving them away to inset. And just to explain, so insetting is when carbon credits are obtained to offset your emissions from within your supply chain. Offsetting is when you purchase carbon credits from outside your supply chain, again with the purpose of cancelling a ton of emissions within your business. So that's offsetting and insetting. So that's the third option. I've got no intention of doing that. That may change, but unless I'm getting some at least cost recovery for my carbon, I won't be doing that. The third option, the fourth, and the one that I will be doing is absolutely nothing. I'm just going to hold on to my credits. They'll be issued in my name, my family trust name. By then, if there's plenty of liquidity and transparency in the market, I'd like as close to market for the value of those credits as they remain in my account, on my balance sheet, just like a share or a bond or a dollar. They're a financial instrument certified by the Australian government, so they should be close to hopefully 100 cents in the dollar without even selling them. So that's what I intend on doing.
Great. Now, before I go to the audience for questions, is there any last words of wisdom from the panel or anything that you haven't spoken about, any questions I haven't asked? And I'll start with you, Joe.
Yeah, thanks, Dave. I think when thinking about the words of wisdom, you think about proverbs. So I've got a Chinese proverb that I think is very relevant for this. It's the best time to plant a tree was 20 years ago. The second best time to plant a tree is now. And I think the other speakers have touched on this. Some of these projects, they're long term. It might be 5 to 10 years before you see any sort of return on investment on this. And some of the clean energy projects, they have 100-year timeframes. So that's massive. That's longer than that's 3 generations. So you've got to be thinking in the long term when getting involved in these projects and going, well, if it's something that I want to consider, should I do it in 5 years' time, or should I start looking into it now? Because 5 years' time might put your return on investment to 15 years from now. A lot of farmers will be retired and will be on to the next generation. So, I would encourage, if you are interested in it, to get more information on it, and to think it's, to make the decision on whether it's really right for you. The other thing that I wanted to touch on is, if you are getting involved in your project, you really need to do your due diligence. I think as this sector grows, there's going to be a lot of people who want to get on board the gravy train. So it's very important that you're working with consultants in your project team that you can trust. They're experts, that they've got experience, and they're going to do the right thing by you. And then the last thing there about your due diligence I recommend doing is, check your numbers and then check them twice. Make sure that the return on investment is there. Make sure you've modeled it. Make sure you've got some different scenario analysis to go, what's the worst case scenario? What's the best case scenario? Get legal advice, talk to your bank, talk to consultants, do all these things before diving in and starting a project.
Thanks, Joe. Joyce?
I think that we're all in our infancy in understanding the potential here. So, I've met people who have retested, like done the second test with their soil carbon project, and they haven't yielded more carbon. You know what? Let's not beat ourselves up about this. It's a marathon. It's not a sprint. There's a lot of variables here, but also do just be quite aware about the financial opportunities and risks. I also met someone who locked in their ACCU price at about half of what it is today. So, I think that as we go on learning, we're going to become, more advanced in understanding the potential here. But at the end of the day, whatever activities we undertake, we need to make sure that we've got profitable farming businesses that are resilient into a changing climate as well. So that's why it's never been more important than now to start thinking about the resilience of the businesses, about soil carbon, making sure that we've got, the potential for our soils to hold soil moisture, the trees on our farm to protect livestock from heat. So, there's never been a better time than now to start to think about these things and take action.
Right, Joyce, thank you. Dan?
Yeah, I think I'll pick up a little bit on what Jacob said in terms of it being a long-term proposition, and part of that is thinking about the broader picture in terms of how it might affect your future planning. Speaking as a tax lawyer, things like if you're looking to restructure your land in the future, whether or sell it and apply, say, small business capital gains tax concessions or use tax rollovers, these are often requiring the use of the land to be in a business. So if you're starting to have passive income receipts because you sold a carbon sequestration right and you're getting receipts from a service provider, that can start to impact on things like that. Things like your land tax, when you need to be predominantly using the land for primary production. So how does that sit against that? Stamp duty on restructuring. Again, if you're looking at primary production concessions for moving land within a family group, you'll need to have the land predominantly used in the business of primary production. So I think there's a broader scope of things to think about as part of planning for a long-term carbon project. I mean, these projects have a permanence period of 25 or 100 years a lot of the time. So it is a long-term thinking that's required. So do rely on your trusted advisors. And just a bit of a shameless plug, but in our Agribusiness Advisors Guide, there's a chapter on the legal issues associated with and commercial issues with carbon farming. So if you're interested in that, you can pick up a copy of that. There's an order form in the packs.
And all good bookstores?
Some bookstores, like Car Park website. To the extent you classify that as a bookstore.
Yeah, look, the soil carbon industry is new and it is a bit complex. And it's complex for the reasons Jacob mentioned. Government wants to get it right. They want a quality credit. They don't want something that is, airy-fairy or people can poke holes in it. So if it's going to be right, it is a bit complex. So you have to do a bit of work on it, and you don't have to sign up to anything to do a bit of work on it. There's plenty of people out there, good people, that can give you a very quick, fast, very, very cheap assessment of if it can work on your place. And just, there's no rush here. Some people are sort of thinking, we've got to rush, we've got to hurry up and be carbon neutral as a producer because we're going to be slugged with a tax. And I don't think that's the case. Think do it right, do it properly, and do it in a way that aligns with your existing production objectives. If you're a beef producer, wool producer, grain producer, you still are that. So find a way that you can be both.
Right, now we do have a couple more minutes and I'm mindful we have a number of people online today. So if they've got any direct questions online, please do shoot them through and we'll direct them to the right participant. But anyone today, do we have got any questions that we haven't specifically covered?
I don't have it, it's not particular for anyone, but Hamish, you sort of touched on it before. While there's no rush or anything like that, in terms of an eligible activity, say you had have started doing all those fertilizing, all those sorts of things across your whole property when you bought it, and then you discovered carbon farming, you can use those as eligible activities. So
Yeah.
I just didn't know if anyone wanted to sort of touch on how that.
It's a very common criticism of the soil carbon method is that it appears to be designed for those that have not been looking after their country or they've been overgrazing or doing something wrong. What I'd say to that is, we've soil tested maybe 250,000 hectares, and there's very few places that don't have something that can't be improved. We've got a client near Ebor with 16% soil carbon, twice what the Australian chief scientist thought was saturated for soil carbon. And this person, they do a lot of activities on their farm. We helped them tweak a few things on their pH, which wasn't quite right, and they increased by 0.3% within 2 years from 16%. So to say that it can't be increased on any particular farm, I'm yet to see that. So there's always something that you can find. That's kind of our job, is what is something that is restricting or constraining soil health or pasture production or can be improved in some way or other. That's what we're looking for.
The offsets, so we've got these conglomerates going through the offsets. The RAA over the last 20 or so years have done those with a shut up country and people have been remunerated for it. How do you manage that? So the RAA with the trees, they're funding tree lines and all that's in the riparian zones, and they've shut off country and financially incentivised clients for that. How do you manage that going into these where they're essentially shut up with the government?
I'll have a little bit of a go at that. I mean, the trees aren't really our thing, we're soil, but where the RIC or the RAA or anyone has an eligible interest on a particular title, to do a soil carbon project, you need to get consent from that eligible interest holder. And I know that does apply for RIC or RAA mortgages. I don't know about...
Well, they typically, over the last probably 10, 15 years ago, they were actually incentivising people to shut up country for 20, 25 years. And that's, I know clients that have done that, and there's a caveat over those certain areas. And it's quite interesting to see where they actually got physically funded to shut that up. I think it's 3 times a year grazing or something like that, where livestock allowed in. So,
And if you come across that,
It's not something I've seen, no, directly. I'll probably only echo what Hamish said in terms of entities that have interest in land or other existing rights over land are going to need to give consent, whether it's mortgagee, native title, pastoral leaseholders, so Crown in the case of pastoral leases. So it's possibly an issue that needs to be negotiated in that process.
It was a big, I'd say 10, 15 years ago, a lot of people looked into it.
Things have changed a bit in that space. You know, there was a method that the government energy regulator had called avoided deforestation. So if you had 20,000 hectares of mulga country at Cunnamulla and you reduced or restricted grazing pressure on that 20,000 hectares, some model apparently says that's worth X amount of credit. That has stopped. That has stopped. There's another initiative which is biodiversity credits, and again I know a very, very small amount of that, but I gather that's a similar principle. You need to protect a particular classification of a biodiversity. You need to bring in experts to do a biodiversity assessment, and they find a particular box or a particular animal or something, and in order to protect that species, you might need to restrict livestock pressure. That's all I know about that.
The offset country, a lot of the larger organisations look at those offsets, and they were looking for certain species across that too.
Yeah.
It's interesting.
It's very interesting biodiversity. There's something like 300 different classifications of biodiversity. So if you're trying to put a power line through somewhere that's got a particular species and you're clearing 1 hectare, you need 6 hectares, I think, of that species somewhere else. Yeah.
And I think one of the big issues there is the regulator's very big on additionality. So they're very big on, you're going to get into this project to do something in addition to what's already being done. So, you know, if you'd already locked up that country and you're already getting paid for that, it would be a hard sell potentially to the regulator to go, oh, can we put this as part of my project as well because I'm already doing it? They'll go, well, no, because it's not additional to something.
Fairly certain they were 25 or 30 years that they shut that company up for. Yeah.
Yeah, so if you were getting into, say, a soil carbon project, it may be that your eligible area doesn't include that locked up country.
Yeah. Thank you.
In the event that you are getting a little bit lost between the proponent and the actual land itself, so a carbon project is undertaken, you've gained a whole bunch of accus, which are then put into the proponent's account. I'm interested in the liability where it lies when a property is sold and the obligation for the purchaser to continue that project, and also if those accus or part of those accus have been sold to someone who wants to offset. Now, a polluter might want to offset their bad way of doing things. What's the obligation or liability for the next people that would buy that land? How does that work?
Probably makes a broad comment out. Again, I'm not a property lawyer, but just based on the work we've been seeing in our office and I've been tangentially involved in that sense. As a matter of law, the carbon sequestration right is actually a separate legal interest in land. So when you're having a carbon project, the landowner will either retain that sequestration right if they're the project proponent, but often a service provider, if you're outsourcing the project, they'll normally wish to have that as a security. So what that does is it sort of carves out right in the land to benefit from the carbon sequestered in favour of the service provider, and that being a legal interest in land is actually dealt with separately from the land, which means that if you sell the land, you're selling all of your rights and entitlements in relation to land except the carbon sequestration right. So a purchaser is buying subject to that right, which might impact on the value of the land, for instance, depending on the project.
So that'd be a separate contract if you wanted to buy that.
Yeah, let me have a bit of a go as an example, Graham. So in my case, my project, the landowner is the proponent for the soil carbon project. They're both in our family trust. But if I wanted to put the project in the name of my son, for example, Walter. So Walter owns the project, our family trust owns the land. Walter needs a deed of grant of legal right to do the soil carbon project from our family trust. Now he can, and that means that I give him the right to do a project, including the eligible activity, and any credits that are issued to Walter. Walter can sell those credits, or he can sell the project, a bit like a water right almost. It is separate, but my land is subject to a deed of legal right to Walter or whoever owns the project. Now, every project is different, every farm is different. This is where we get very clinical and careful about who you're working with as the proponent. Is it a service provider? Some project developers require under their business model that they are Walter. They have that deed of legal right. Some other people use it as part of their succession planning. You know, their kids get the carbon project, they keep the land, or vice versa. But it's a very important consideration. That's the first step. The second step is those ongoing activities. Now, we have made sure that those activities, whether it's us or Walter or whoever has the right to do the project, that those activities are simple, they're efficient, they're in alignment with my production anyway. So even if Walter sells the farm, or sells the project, I'm inclined to want to continue those activities. So long as I'm meeting the additionality, I want to keep doing them anyway, or even better, that they're already done. So the obligation is effectively extinguished. Lastly, this is the way I think of a soil carbon credit. A bit like a promissory note. It's a promise from me that I'm going to keep a tonne of CO2 in my soil by continuing my eligible activity for the permanence period, usually 25 years. If I break that promise because that CO2 comes back out, or I don't continue those eligible activities, I have effectively breached that promise. That promissory note, I would rightly expect a knock on the door from the regulator to say, you've got to buy that back. Now, they're a little bit subjective on how they deal with that, because they are, I have to say, the regulator are very, very, very good. They're working hard to get this happening. They don't want to chase people that have done the wrong thing accidentally or what have you. But I personally can expect, if I don't keep that tonne of CO2 in the soil by continuing my eligible activity, I'm expecting a knock on the door to give it back.
I'll just add to that on the risk side of things, in terms of if you are using a developer, which is, I guess, a little bit different from Hamish's scenario, where they're going to be the project component, they're going to get the ACCUs, you're going to get a share, and they will often request the carbon sequestration right. Contractually, you'd want to push risk onto the developer in terms of a reversal event or a disturbance event. That means the carbon coming back out of the ground. So they will be responsible as the proponent, and you'd want to seek indemnities from them. That, or if the regulator's got issue, that there needs to be a carbon maintenance obligation over the land, for instance, saying you've got to maintain the existing level of carbon, or there's other obligations imposed, you're actually covered by what you've arranged contractually with the developer in that scenario. So yeah, these are really important considerations.
Fantastic. Any public questions from?
Sorry, I'm still trying to get my head around this. Sorry, Hamish. When you said money, how do they measure that? How do they measure that and say, you earn so much money for this now? And then how often do you have to get tested to make sure that you're still doing the right thing to gain that money so it can be put into that trust?
Okay, I'm talking about soil carbon only now. So you must test at the beginning, year zero, what we call the baseline soil test, before I begin any of these new eligible activities on my farm. So I do my baseline soil testing, which is quite rigorous, and they're completely random soil tests, minimum 38 mil diameter, minimum depths, sent off to an independent lab, get those results back, and then I start my activity. I must test and audit my project within 5 years. And so I can do it a year later, but I probably haven't increased my carbon practically yet. So I'm going to wait probably 3, 4 or 5 years before I retest. So I've got my 2 soil tests now. If my carbon level, my soil organic carbon levels have increased, I must then offset any increase in farm emissions over that period to come up with what's called a net abatement amount. I'm not offsetting all of my farm emissions, just my farm emissions from year 0 to year 5. I've got that net abatement number, which is in tonnes of CO2. For those tonnes, the regulator will issue to me an Australian carbon credit unit, an ACCU. So I apply to the regulator,
Right.
Here's my audited project,
Yep.
my soil carbon levels, minus my increase in emissions, my net abatement amount, I get my ACCUs then. So I can either, as I said, sell them, monetize them however I wish, and then I have to be retested again at least 2 more times within a 25-year project to make sure that I haven't plummeted.
Property sold.
All right. No more questions?
What are the costs in establishing a baseline?
Great question. A lot of work's going into getting it down as low as possible. The regulator, for the reasons Jacob mentioned, wants to do it right, wants it to be independently tested, remove any risk of abuse. So it's completely random sampling points. We're down to about $11 a hectare for baselining. So in crude terms, you need to do at least 3 samples per strata in your project area and at least 3 stratas within your carbon area. So at least 9 sample points. But we talked about the increase in soil carbon levels. The regulator will look at the variance in your different testing, and the higher the variance, the lower the certainty that they will have that you've actually increased your soil carbon. They will hit you with a discount with the credits you're issued. So long story short, a couple of extra samples, maybe another half day sampling, you might get an extra 20% in credits or something like that because you've reduced your variance. I've just explained something that's taken 4 years to learn. Cost is coming down, but try not to just focus on the cost. Another day's sampling could give you it's an investment. Your baseline is an investment in your 20-year project.
So you've obviously been doing this for a while. How did you see the impact of the dry period that we had back sort of 18, 19? How did you see that on the carbon, and how long do you think it'll actually take to recover from any losses in that time?
This is one of the most common questions we get. Should have done my baselining in 2019. The first thing I say is soil carbon is extremely variable. It's coming into plants as a gas, converted to a sugar, then converted to a solid and going back out again. It's not just sitting in the soil, it's coming and going in 3 or 4 different ways. But we have seen some extraordinary results. Places that they've had a great 2 years, they've got brand new improved pastures full of legumes, and their carbon levels are lower than they were in the 2019 drought. Because if you get too wet, your soils might become anaerobic, everything dies. As your roots are penetrating and your pastures, your brand new, beautiful, high-performance pastures are getting going with greater root depth and legume, they are actually breaking down soil molecules, which is releasing carbon, which is grabbing to oxygen atoms and oxidising back in the atmosphere. So your carbon levels actually decline for a period when you put new pastures in before they get going. It's like taking a 2-cylinder engine out of your car, putting a V8 in it, and it barely gets going for a while, but then away you go. Further west, where people have done exclusion fences, and on the inside of the fence, it's wall-to-wall mitchell grass and buffel grass, and it looks fantastic. We expected the carbon levels to be twice as high. It was the exact opposite 5 years after they built the exclusion fence. So again, it depends on the species. Mitchell's and buffel grass, which has a 2-metre taproot, there is maybe a 5-year decline while things are getting going. But for them, the challenge will be just to bring back the carbon levels to what it is on the outside of the fence that's completely bare. So again, it's about each place. What are you looking at the moment? What's saturation for your place, your soil, your rainfall? Where could it get to if we solved an issue? I haven't answered your question at all. Made it more complicated, but
from what you've been saying, it sounds to me as if in your field anyway, you've got you're mixing the carbon with pasture improvement and working on the soil. As you say, the method that was tried and now stopped proven fault was when people were just buying large tracts of land and locking them up to let them grow trees. And that's sort of been proven to be wrong. But if you turn around and look at that photograph behind you for an illustration, imagine if you have an aerial shot of your property where you own the hills that have the timber, which is denser on certain sides and thinned out on the front, and it runs down into your open country, your valleys. Getting down into that valley area and that sort of undulating cultivation, that's where you're doing your work. What can someone do with, what can you do with the hill country? If you're currently using it for its grazing country, you're running sheep up there, you're running cattle up there, and if you remove the livestock, it will revegetate itself. We've seen that. I have some country like that at home, and even with the drought, the grass it was dirt, but it's all come back. But also the trees, where there's one mature tree that's dying, there is now 15, 20 sucker trees coming up to replace them. And then there's some larger ones that came up 5 years ago. If you take the stock out, it will revegetate. And it's the growing trees, the younger trees, I believe, I don't know, I'm certainly no expert, you know more than I do, but it's young growing trees that fix the carbon. The mature trees, once they get, at the end of their life, they've fixed all, they're not growing any bigger, they've fixed all the carbon they're going to fix. And so therefore they've lost their value as far as sequestering carbon. Is there any way that someone can get more benefit out of that country? Because the way things are going with commodity prices, especially the wool market, people like myself that would run sheep in that country, that country's generally been cheap in value per acre for that reason. However, it's always been quite lucrative to run merinos up there, grow a bit of wool, whatnot. That margin is getting finer and finer and finer, mainly because of the wool market. Now, and then you start hearing about carbon farming. It's a very simplistic approach, but if you own a lot of that country and you say, right, I'm going to take livestock out of there, I'm going to let it go back, and you start talking about biodiversity. We have 105 species of birds that live on our property, and some of them are in on the endangered list with the Biodiversity Trust. I'm starting to think, do I get rid of the sheep? Do I lock that up permanently and let it go back to, and it will fix carbon with the young tree growth. It will preserve biodiversity, but let's be real. What value can I get? What can I get a value from it? I mean, even running sheep on today's market, I might be able to generate 60,000 out of that country.
And with that,
Can I do the right thing by the?
Come and grab us afterwards if you like. I'll give you a couple of minutes explanation.
And the ironic thing is that photograph behind you is, I mean, I'm sitting here looking at it, and it's sort of like sitting up looking over our property. And it's not all that hill country. We do have some open country, and I'm just thinking, you with your soil types and improving soil, yeah, we can do that down on, 3,000 acres. But there's 2,000 acres that, what are you going to do?
So we are seeing people doing a mix of things on farm. They're not just throwing themselves into the soil. They're looking at biodiversity opportunities. And recently I was on a farm and someone was doing agroforestry. So they're looking at windbreaks on their farm, and they invested a long time ago. They've progressively been planting. Trees are growing, they're chopping them off, timber, and they're just growing back again, and they will harvest them in time. So, over the long term, there's a lot of avenues to look to diversifying primary production income. Yeah.
all right, probably got time for one more question. No? Okay. So I know Panelist will be sticking around for a little bit longer after. So if you do have any direct questions and want to catch them, please feel free to grab them over a cuppa. But look, personally, for me, huge thank you to all you guys for your time and sharing your expert knowledge today, and for well, certainly Daniel and Josie for how far you guys have travelled to be with us today. And Hamish, but jumping and making that effort. So it's been fantastic. So we do have a small gift for each of you, and I'll pass that on to you after we've finished. And finally, thank you to all that have attended today. This has been a huge turnout for Foresights. And if you do have any specific subject matter that you'd like us to cover, do feel free just to pass that on. And if we do have enough interest, we'll put another one of these seminars on, because I think there's some real value in hearing from the experts if we can put them in front of you guys. To all of our online attendees, thank you for your patience, and thank you for coming along. There will be a video of today made available to everyone, either that is in attendance or online. So thank you very much for your attendance and attention. It's been a fantastic seminar. So thank you, guys.